Hi, I'm Don Carriker with IWantAGreatHomeLoan.com, and it's time for another edition of It's Not Rocket Science. We're here with Justin Sturdivant from Greater Springfield Realtors, and today we're going to talk about what are the proper steps in the home buying process. And we're going to help you avoid the hassle of finding a property and not having it be the right property for you. So, Justin, I'll just want to find out, what's the first step that people typically take when the thought of buying a house comes to mind?
Well, the first step they should take is to get in contact with the lender.
Really?
Yes. I cannot. Well, it happens a lot of times they call me first.
Okay.
So what I try to do is direct them to you,
Okay.
who is you are my preferred lender, to get them going in the process. I can't tell you the number of times that people come to me and they have a house already.
They've already found something?
It's on my website, or it's on someone else's website, or they drove
Right.
by it as a neighbor's house or whatever, and they got their heart set on it. So they're like, I'm buying this house, their wife's in love with it, they want that
Drop
house.
the contract.
They're like, what do I gotta do? Well, the first step should have been, see what your buying power is.
Okay.
So what I do, and it's one advantage of using a realtor, is I determine your buying power by putting you in contact with the good loan officer.
Okay, so you don't run the numbers.
I
You
don't.
just go ahead and get somebody in contact
Yes.
with me or a good lender.
Yeah.
And I'll take it from here. What we would do is, it's hard to keep track of interest rates on a daily basis. It's hard to keep track of what your payment will be and that kind of thing, and what other costs might be involved, like mortgage insurance, that they may not even know about. So what we'll do is we'll get them taken care of to where we know what they'll qualify for, we know what the estimated costs will be,
Okay.
we know for like taxes and insurance and that kind of thing, and then we can fine tune all that with what they're looking at in their price range and see if they're in the proper ballpark. Because
Okay.
I've had people numerous times, goes both directions. I've had one person come in and they thought they could only afford a $150,000 house, and by the time we ran all the numbers and I showed them how they qualify, you know, they had a car that was going to be paid off and we didn't have to count that debt and etc. Certain things allowed them to qualify for a bigger house that they wanted to get. And then the flip side happens where they think they can buy a $300,000 house, and then we find out that they only got a $200,000 qualification capability.
Okay.
And then that's when I send them back to you and I say, with a pre-qualification letter, here you go, Justin, go out and find them a $215,000 house maximum, and then that avoids what? When you're taking them out shopping, what does that eliminate?
It eliminates a lot of wasted time.
Mm-hmm.
Because if you're looking at 300,000, you're approved for 215. The odds of us negotiating that far down turns out to be pretty slim a lot of times.
Okay.
So we don't want to waste time. I mean, our
What
buyers.
about aggravation? I know that
It's
my wife, if I showed her a $300,000 house, she'd say, hey, I'm all over it and let's buy it today. I think if I did that and then I couldn't afford it, it would make me really look kind of foolish.
It would.
And she'd be mad at me.
So she has something in her head, and she has 300,000 in her head, and we're looking at 215. She's never going to be quite happy with that.
Okay,
So
so
we-
as you go down in value,
Yes.
because you can't afford it, she's always comparing it to that $300,000
Yeah.
house, or he, for that matter. I mean, it could either, whoever does the finances
Yeah.
is the best person to be in contact with me.
And don't get me wrong, $215,000 houses are going to be very nice houses.
Mm-hmm.
But when you build something in your head, you get expectations set.
Yeah.
We're trying to avoid unreasonable expectations.
Right.
So,
So get a lender, get pre-qualified.
pre-qualified.
I send the letter over with with customer in to you.
Yes.
That's pre-qualification level. Then what happens?
So we find your house.
Okay.
So we know what our expectations are. We're finding a house that fits your needs and what you want, and we're going to make an offer on it, write up a contract.
So that way you didn't look at any more, too expensive houses, or
Yes.
you're not looking at a bunch of dumps that you think you have to qualify for, and you qualify for more.
Yeah,
You
absolutely.
qualify for better.
Yeah. So it's setting a reasonable expectation for us.
Okay. And then after let's say we find a house,
Yeah.
we both agree, all three of us agree, the client, me and you agree that everything is copacetic and it'll work, then what do?
Well, if it's a house you want, what we're going to do is we're going to drop a contract.
Okay.
And that's where that pre-qualification or that letter from you is going to come in handy, because a lot of people won't even look at an offer unless it's accompanied accompanied with that.
Oh, okay.
Yeah, because they wanted.
Nowadays, probably.
Yes, I mean a lot of
So-
it. We had so many offers coming in for a long time.
Mhm.
People would put the offer in, and then they would go to the bank afterwards.
Right.
And then you find out, same thing we talked about, that they're not qualified for enough money.
Mhm.
So we're avoiding that step. People won't even look at the offers unless they have that in hand. So we're going to write the offer up. We're going to send it, submit it.
Mhm. Now, do you put a time period on that?
We do, depending on situations and what you're getting with the realtor, especially with myself, is I'm going to communicate with the other agent,
Right.
unless it's my listing.
Mhm.
And I'm going to communicate with them and kind of find out what the timetable is. If I'm talking to the other agent and the person's out of town for a month, we're going to work around that, of course. But otherwise, we try to do no more than 5 days, 5 business days.
For them to decide whether they want
For
to
within
take
the
the
side, and
offer.
that's long.
Typically, you've been in the business a while. How many people put in an offer and they get countered compared to how many people put in an offer and they don't get countered?
I would say between 85 and 95% get countered today.
So it's like a tennis game.
It is.
It's going to go back and forth
It
for a
is.
week or so, and then finally you'll agree on a price somewhere in the middle that's good for like a win-win situation for both the buyer
And that's what
and
we're looking
seller.
for.
Okay.
That's part of our fiduciary duties as real estate agents is to get that win-win.
Okay.
I don't represent the seller when I'm working with the buyer.
Okay.
I just represent the buyer, so I'm trying to get the win for that side, and the seller's agent's doing the same.
Right.
Trying to get the win for both sides.
So you get the contract.
Yep.
The offer back and forth. When does it become a contract?
When we'll use a scenario where we made the offer, I made an offer to you, you're the seller, you counter me back.
Right.
If I accept that counter offer and I sign that, then it becomes a contract at that point.
Okay. So whenever both people have signed it,
Agreed to terms.
agreed to terms.
Yes.
Then it's a bonded, or you're bound on that contract.
Well, yes.
Right.
We are bound on that contract. So what we enter into after that point is an inspection period.
Okay. And then the inspection, if there's any issues or problems with the house that are undisclosed when you look through the house, you do an inspection on it, you find out the foundation's falling apart.
Yeah.
Then you can get out of that contract. You're not obligated to have to buy that house.
Well, what we're going to do, how that's going to work is, say we find the foundation is crumbling on the inside. It's something we couldn't see when we looked at the house. An inspector found it. We're going to ask the sellers to make repairs.
Okay.
If they choose not to make repairs, then at that point we could walk if we wanted to.
Okay. So then anything that's possibly wrong with the property can be repaired.
Yes.
Give them the option, the seller, to fix that. And if they don't fix it, then you don't have to buy the house.
Absolutely.
But if they do fix it
Then
to
we're
your satisfaction, right?
moving forward.
Then you move forward and you buy the house.
Absolutely.
And you're in your new home.
We're in your new home.
Okay.
So
All right. Well, that sounds good, Justin. I appreciate you coming by.
no problem.
It's been another edition of It's Not Rocket Science with Don Carriker from IWantAGreatHomeLoan.com, and today we're with Justin Sturdivant from Greater Springfield Realtors. Have a great day. Thanks for stopping by, and I hope you find a lot of good information on our website. Have a great day.